Good afternoon. This is Chris Brecher with a simpler trading free video slash chart patterns mastery free video. What's today about on the April 16th, 2024 video? It's all about markets want to rally. I'm not trying to be corny about this, but I've used this kind of phrase forever. And that is that there's a lot of sentiment indicators like put call that are really in the sky. So I'll show you what we're talking about. If you go into the moving average of the put call ratio, you're going to see it's pretty rich. There's your put call ratio, and we're going to go and link it in here so you know what I'm talking about. That's your put call. Usually when it moves like that, when you get that kind of trend on the upside like that, that means that moving average is moving up. And that's getting pretty high. So the thing about that, though, is usually that leads to some kind of support in the overall market. The problem with that is this, and this is why I was corny about the bond market won't let markets go up. So on the left, you got the NASDAQ. You look at the MACD on the bottom. So I'm going to go and show you this. So you got the MACD on the bottom here, getting oversold. You got the ES oversold, real oversold. Right here. But on the right, you have the bond market refuse to go bounce. That's what we mean about something staying oversold. So just keep that in mind. That's how I'm looking at this. So until on the right, that can go up while the S&P goes down. And I'll show you. You could go on the left and go to add to compare. And you'll see what we're talking about. Now the bond market going straight down. Stock market, not really down that much. The bonds are almost under where they started the year. But you're going to see that back here, when the markets were going down in August and September, and the bonds were going down, all of a sudden the bonds turned before the stock market did. That's your positive divergence. We're not seeing that. In fact, we're seeing that the bond market hasn't had a bounce. Do I think that the ES futures are too far under things? They're at some support? Yeah, but it hasn't mattered because you haven't had that positive divergence. So how are we going to play this market? Well, the first thing is that we're doing is we're looking to, believe it or not, short gold. That doesn't mean like go crazy. It's one of those buy on rumor, sell on news if it's a non-event with Israel in the geopolitical arena. Hasn't happened yet. We're jumping the gun. But a lot of times these get those gaps, and that's why we anticipated in as cheap a way as possible for next week. So that's all we did in there. When it comes to the broad market, I got to show you these because this is what I've been showing for days for everyone. We're going to show you in here support and resistance for the S&P and on the right, the NASDAQ. So the first thing you're going to notice in here are these gaps right here. That's what I put on Twitter. I put on StockTwits and for our clients. Those gaps on both sides, path of least support. All the way down here. And I didn't even draw that grade on the right. I'm too excited putting this in here. Right there. So on the one hand, you have a gap edge. And then you have the full gap. So if this starts selling off, even though on the bottom it's oversold, it could have a quick move to 5,500. On the right, another 200 points down. Just keep that in mind. It's all about those gaps in that area. Right there. There are a lot of gaps on the way up, so it doesn't take much to nail it. Just keep that in mind. The other thing to keep in mind, though, is a 15-minute chart. As you see how similar they look. So the 15-minute chart has a rectangle the other way. So if this can get over these areas, they can go back and test the prior resistance. Right there. So a lot of times what I do is I take rectangles and I project the width of the rectangles. So we're going to go in here and I'll show you. So I love doing this kind of thing. We're going to take the price range right here, that rectangle. That's about 34 points on the S&P. On the NASDAQ, it's about 112. So ironically, that gets you to those resistance zones. So if they can get over that, sure, they could go to these levels. But you need to see that bond market rally. So that's what we're going to be watching tomorrow. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Sipler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.